Hello everyone and welcome back to another video. In today's video, we're discussing everything to do with the markets around the world, including these big runs that we're seeing on the stock market right now, crypto markets and commodities markets. The markets opened with a huge gap. The question is, will this gap get filled before we potentially reverse into a fantastic Santa rally? We've got the stats on the Santa rally, we've got the stats on gap fills, and we've got a whole bunch of great information that I think you guys will find helpful today. See you soon, everybody. All right, well, here begins our market recap for the markets closed the 7th of December 2021. And when we're taking a look at a heat map of the S&P 500, we always want to know where the large money is flowing. And it was flowing everywhere yesterday. Tesla was up 4.24%. As we suspected, that 1,000-point hold happened, $1,000, big support. Huge bullish movement through there. Amazon up 2.8% and Apple all-time highs during the day, 3.54%. This stock just continuously goes from strength to strength to strength. Now, when we're talking about which index and which markets were doing the best, it was pretty much across the board. There was great movement. We had everything rallying at the beginning of the session. Then it started to just kind of like, I guess you would say, consolidate after that large move. And we did see some selling into the near the close and then buying in the last 5 to 10 minutes. So Wall Street's feeling pretty positive. We know what happens in the close is pretty important. And what happens on certain sectors is also something we want to be taking a look at. So every one of these markets was recovering. Nasdaq leading the charge at 3.03%, really getting rid of a lot of the negativity to do with the inverted or the head and shoulders pattern in this case. Let's move over now to the sectors. IBB 3.92%. That's the biotech sector. That was the best for the session. XLK, the technology sector, very strong. And the more defensive sectors, the XLP, the XLU, these are, of course, the defensive sectors in the markets. They were barely up. So it really showed you that risk was on and the market was feeling good. And this is off the back of all of that news about Omicron, the vaccines, all of that type of stuff. Regardless how we all feel about it, the fact is the market saw it as a positive. It moved up, it created a giant gap, and it brings us to a discussion point about gaps and, of course, about the Santa rally. What do we expect for the rest of the year? So many people know of the Santa rally. They know of this idea that the stock market has generally been positive in December most years, and that around the Santa rally period, so where, of course, Santa comes to town around Christmas Day and then Santa goes back to the North Pole, I like this statement here, we tend to see a bit of a rally. And you'll notice it is overall positive. Then, when we go into January, that tends to be a little bit more mixed. And we usually expect, of course, a good end of the year. People are feeling good. There's less liquidity in the market, less volume trade. And there has been some years where it hasn't really been like this. But in general, over that time, while there's been crashes and corrections and moves, that period of time has generally stayed positive throughout most of history. Now, let's also talk about what happens next year, because a lot of people were calling this the crash or the correction that we needed. We kind of got correction during September. Then we got thrown this left curveball of course, the Omicron stuff and everything else that we're talking about with the Fed. And now we're moving to a point where will we go into seasonality weakness in kind of the February to March period? This is when we actually expect things like technology to underperform. It's a very common month where technology underperforms. So will February actually be where the correction is next year? I'd like you guys to have a guess. Let us know, where do you see, if you believe the market will even have a correction, let's say 10% or something next year in 2022, which month do you think it will happen in? I'm very interested to see your opinions down below. Now, we discussed the idea of gaps, and we've got some great information here that's come out from one of the members of the community. It's great to see everybody creating and compiling data. This is from Ian Worthington. Big shout out to him. It's been a really helpful person actually in collating a lot of data for the channel, and I love that. And what he was doing was he was figuring out how many up gaps, that is only, from 1927 all the way to, of course, October in 2021 when we made this sheet, actually fill. And you'll notice that in general, gaps tend to fill in the first kind of 7 days. After that period, if the gap hasn't filled, it drops off dramatically. And then, of course, the fills happen much later on. Possibly things like a crash or a correction fills those gaps later. And you'll notice that's where that higher percentage is. So for gap fills, where's the stats? Well, the stats are generally here. And this is really cool to keep in mind if you're a day trader, scalper, or anything like that. If you start to see weakness, knowing your stats, knowing when the gaps generally fill, knowing when they're less likely to fill, it's fantastic information. I want to say a big thank you to Ian, and this is quite helpful for us to be able to use in the charts. And speaking of charts, let's get stuck into the analysis. We'll start off here with some VIX. We'll talk about the VIX, we'll talk about some commodities, and then we'll move into, of course, the broader markets, stock markets, crypto, and everything else. And let's have a look here at the VIX itself. So the fear index dropped straight back down. And this was expected. I mean, we always expect the market's going to go up at some point. And when that goes up, the fear comes out of the market very aggressively. And of course, the VIX drops. This is known as the fear index. Basically, it's the volatility in the options. And we move straight back down to around that 20 level. So if we get another day of bullish action on the markets, where will we expect the VIX to be? Most likely under 20 and in a much safer state in terms of volatility. We'll continue to watch this, but that's really all we're looking at. Another thing to mention has been TLT. So this is the 20-year bonds. Usually there's this kind of idea of flight to safety. So the 20-year bonds broke out and then they've pulled back down to our green line here. And if the bears are going to resume, which I don't know if they can by now, but let's say they do resume, this is where you expect the bonds to be purchased up. So TLT is sitting right around that zone where now you're waiting for lightning bolts, double bottom patterns, all those types of things. Remember, bonds are really a flight to safety. They're not that great from a return-based standpoint. So really they're just used as an asset allocation when the rest of the market, the big players, are looking to, I guess, flee from risk on and start to take some risk off. Let's move now to US oil. US oil here, phenomenal trades, really great movement here in the price action. We noticed on things like the 2-hour chart that we liked what we saw. In fact, it was basically a Wyckoff accumulation down here in the lows, or some people called it an inverse head and shoulders, with the head here, the left shoulders, and then the right shoulder. However you want to look at it, doesn't really matter. The point is it consolidated, it breached through here, which we reported on and a lot of us talked about, and then we moved straight up to the resistance here at 73, and now we're starting to try to put some pressure on to the upside past that. The next stop could be around that 75 level, and it looks like oil is really trying to put in the good yards here. We've got OPEC in its favor. OPEC, of course, is trying to fight many governments around the world to keep oil high, and they tend to get their way. It's kind of like a little bit of a cartel there, isn't it? They do tend to get their own way, and we are looking now towards, can we breach this level up here? Because we get a closure above here for the end of the week. Could we be looking at some seriously long oil? It's very possible. Long leg doji, low, high, open, close, similar level, showing us indecision. We close above, decision made on the bigger time frames, and more swing trading can ensue. So it's a really important point here coming up on oil. I think it's been good trading so far, and if you recognize the accumulation base, I'll give you a clap. Well done to you. That's fantastic, because it's a good base, and it's certainly one of those great setups. We've been pretty good here with our oil analysis as a community. A lot of you seem to like it, so we leave it in when we get good setups. Now, speaking of potential, this one, old gold and silver. Oh, what can we say about gold and silver that hasn't already been said? We've got the beginnings of the recovery here. The whole thing was basically a falling knife. We know December tends to be positive for gold. We've now seen a new peak here off the recent couple of days, and we got that long leg doji, and now we're about to make the decision made above. That's a positive sign for gold. The next big level for it is that 1810, and we've spoken about 1810 so many times, partly due to the weekly long leg doji, similar to oil, the low, the high, the indecision. Can we make a decision made and then start rallying? And partly just due to the fact that on that 2-hour, the 4-hour, the 8-hour time frames, we know there's resistance all over this 1810. This is the level where the bears will try to bust it back down. And if the bulls can get control of gold above there, then we're starting to look really positive for that December run. It's the same thing on silver. If we move over to silver, very similar kind of accumulation base. It's rating for gold, you would think. And you've got some nice buying here, but nothing super strong just yet to say, okay, let's get into this market. You'll notice here the wicks on the daily, wick rejection, long leg doji, key point right there on silver. Commodities are certainly getting a little bit more exciting when you get bases like this. Let's move over to Tesla. As we mentioned, Tesla moved off the 1,000. It was a fairly easy day trade if you'd taken it into the close, or even during the open, because it came back down. It showed you momentum open, came back down. We had the bullish hammer off the 1,000, and then it started rallying. Now, we do have a little bit of a problem at around this 1,060 area. That's certainly a key zone for it. And if we breach past this zone, the next points could be quite a lot higher. I mean, I'm thinking actually all the way up here, maybe even near that 1,200, 1,170. So there's plenty of upside in Tesla. But remember, at this stage, we're still in that big consolidation after the large move. So we've got the consolidation that happened over here after the large move, consolidation. Tesla tends to play that way. So into resistance, watch out at this area, but if it busts through it, could be a nice little run for the next sessions. Let's move over to Amazon. Amazon holds the downward trend line. So here's the downward trend line. That acts as support. We got 2 wicks there. We suspected it might do okay off that zone. It certainly did close relatively bullish. And now we move towards, okay, let's keep going, Amazon. Let's keep moving towards that 3760 and what we're hoping to get by the end of the year, which is close to a 4,000 reading. 3,900, 4,000 is the aim here for Amazon. It's really been sitting doing nothing for a very long time. And in some ways, fundamentally, it's actually been getting relatively cheaper. It's just the growth is kind of coming out of it due to that really massive, intense growth it saw during the 2020 pandemic lows. And of course, all the purchases and everything that happened after that. But they've got so many things in their business. A lot of people are bullish this stock, and I think rightfully so. It's been sitting for quite some time. It's almost the sleeper FANG stock. It's the one that nobody talks about as much. It hasn't been doing as well, and it kind of reminds me a lot of the Netflix charts. When you go and have a look at Netflix, for a long time, that stock didn't do anything either. Hopefully, it gets a nice closure this week, and then we start to see some movement through. We'll follow it more in the next coming videos. Let's move over to the indices now. Indices discussion, always fun here. We'll start off with that Russell 2000. Who doesn't love the Russell 2000? Well, probably a lot of you hate it right now for valid reasons. But we have here a bit of a downward, or the trend line itself, that's acted as some resistance, I guess. We've left this on the charts for that reason. But a nice double bottom. If we get a gap fill, where does that come back down to? 220. Where do we expect buyers to be? Most likely 220. If we look at a 2-hour chart and zoom it in, which we're on at the moment, you'll notice that's where the 2-hour 20 moving average is as well, which is fantastic at the 220. Resistance, 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 resistance. Could that be support? You would think that makes logical sense should it pull back. Otherwise, we're just looking for a new peak to be made, and then we move towards filling that gap here, because of course we haven't actually filled that massive gap that happened just recently when IWM crashed pretty hard. And this market really has been down a lot more than any of the other markets. It's got the biggest runway up. It's got obviously the biggest risk because it's the smaller cap companies, but there's still that potential for it to go to that 250, 260 rating based on the fact that it's been in a channel for a long time. And while it did false break to the upside, there's always that potential it comes back through. Again, go cite Netflix. You'll notice very similar things. I always look at the monthly here as a bit of a token. See how the monthlies held it down? So while the weekly came through, the monthly did not. And at the end of December, should we be above here, I think that's a very positive sign for the Russell 2000. Very positive indeed. Let's move over to the NDX now. The Nasdaq just absolutely blitzed it. Again, huge gap here. I could definitely see that gap trying to fill, though it's more of a guess. We'll have to watch it through the session. If it starts making a new low through the session, that might have some algo trading on it. Moves back down. I think there'll be some buying around this level, this 15,989, basically 16,000 zone, should it happen. And it does look like it's snapping off a lot of the weakness here. I mean, the bears would be clinging on for dear life to try to support this market right now. For them to think it's a turnaround, it's going to be tough. The news is more positive. This was a news-driven trade. It was a news-driven short, and the technicals are holding on the S&P 500 really well, but the Nasdaq's just getting that massive buying coming back into it. And I think it's really hard pressed to get the bears in line. If the bears got it underneath this zone again, of course, then yes, I believe we would go down to this level. But it seems to be snapping most areas, and I think that's a bit of a problem there. Filling of the gap will be the big one. Now, we mentioned at the start of the week, the most important market to watch was going to be the S&P 500. And I really think it was. It had so much great technicals on it. We hit the 45 or 450 or the 4,500. This level had huge amounts of puts on it. Now, we call it a put wall when we have a lot of puts sitting on a level. And that really kind of gives us a nice support base. We also know that it was a Fibonacci pullback of this level here. So if we actually bring the fib on, let me just do that for you guys now. For any new viewers out there, here we go. We'll bring the fib on. We know it was between our 38.2 and our 50 fib. This is where Wall Street loves to buy positions. We had our weekly 20 moving average sitting right there at the 44.50. And we even saw on Friday some strong buying. So if we actually go down to we'll look at the SPX here for a second. We saw some strong buying coming through just near the close. Look at this, some nice wicks. Wick purchases, wick purchases, wick purchases, closure, gap up, movement from the trend line down. We cross above, and then we've moved ahead. So while we may get back pullbacks down to these things, look at this. We've got a 2-hour 2050 sitting right here, acting as dynamic support now. That's going to be a big deal. We move over to the daily. What else is sitting there? It's going to be a daily 20 moving average and a daily 50. It's going to be hard to get through those to the short side now. We've snapped off that 4,650 area being resistance, potential resistance. That's completely closed above. And we've got the Santa Claus rally coming up, the general positivity coming into December. It does look overall, the price action's what we have to follow. And currently the price action looks good. We can be cautious if you want to, but really the price action still looks relatively strong. Speaking of strong price action, let's move over to Bitcoin and the crypto markets. Bitcoin shorts continues to decline, as we have really detailed a few times now. When this trend starts and it tends to switch, especially to the downside, we do tend to see further shorting pressure, as in the shorts come off for Bitcoin. When the whales move, they move fast. And we've seen that several times. They move in, they dump that position, dump that short position very quickly. And we tend to see, of course, that react with a positive Bitcoin price action. So let's move over to Bitcoin. It's looking pretty good. That beautiful area, 49,700 resistance breakout, fantastic. We then get to 52K, it comes down. Our aim here is to try to find whether Bitcoin can move up to the 54K area. This is the most likely kind of area for it to find some extra trouble. And so far, so good on the price action. Wick rejection. Maybe need a little bit of a movement above here, above that 51K, and that will start the next hopeful rally, at least on the smaller time frames. Of course, you need to analyze this minute to minute, hour to hour, because the market is moving quite quickly. But Bitcoin trying to stabilize around here, and if it does get back down to 49,670, this is where we expect some bigger whale buyers to try to load up on the position. It's starting to stabilize. That's a good thing for crypto markets, and we're seeing the positive reactions across the board at this stage. Let's move over to Ethereum. Very similar, though Ethereum has slowed. So this coin has held up a lot, and I think the retail mentality is thinking, damn, I've got Ethereum here at 4,322. I'm only down marginal percentage, not much at all. Yet I can go and buy DOT, I can go and buy ADA, Cardano, I can go and buy whatever else coin I'm looking at, and I might be getting a 40% plus discount. So I think some Ethereum holders, because they tend to be the ones that hold alts as well a little bit more, a lot of the Bitcoin crowd, they just hold Bitcoin, that's it. Then maybe they're selling a little bit of portions as it's holding up much better than the other coins. And I don't blame them for that, but I think that's partially why we're getting some sluggish movement from Ethereum. Still looks strong on the charts, nothing really wrong with it. But to get that big next rally, we need to break through these previous peaks over here. Once we get through those, that will be the tick of approval. That's where we want to basically see the markets be, and of course move through that zone. If you've enjoyed today's content, please remember to subscribe, smash that like button, guys, and we hope you're enjoying the daily content that we bring on this channel. I'm super interested to see everybody's responses today. Let's find out what you all believe. See you soon.